We're still early.
How early? Explain. I mean, to people who say, how can that possibly be true? Now you're starting to see the articles trickle out. Oh, AI might not be that transformative. Oh, talk about why this stock can still have more room to run.
Yeah, you bet. So people get nervous, and I get it. Don't get me wrong. I mean, the stock, and not just stock, but the numbers have run so far, so quickly that people do worry about sustainability, and I understand that. But at the same time, you can sort of look at where the shares are trading on a valuation basis. They're much cheaper than they were before this started. As much as the stock has gone up, like the demand for the parts and the impact of the financials has gone up even more. It's been really amazing. We are at the point now where we're seeing like massive amounts of capex from the hyperscale players, which I think is good. I think where people get nervous is on the enterprise side. We are still in the experimentation phase, and this is true. Like enterprises tend to move slower, but I do like the amount of breadth that we are seeing here. There are many enterprises that actually are experimenting here. Nvidia talked about this. I think they talked about like large cloud vendors were only about 40 or 45% of their total revenues there. Their customer base is still broadening out. We are seeing more and more deployments as business models are getting built on the enterprise side. But it does take time. Like the hyperscalers can build up very quickly. The enterprises, take a little longer. And I kind of get that nervousness. But at the same time, everything we're seeing right now, at least in terms of near medium-term demand, still seems really strong. It doesn't look like we're seeing any signs of slowdowns yet.
Recently, after a pullback that lasted for several days, Nvidia stock witnessed another noteworthy growth wave after the independent Wall Street firm Wolfe Research raised the price target on the semiconductor giant. This showcases the firm's strong confidence in Nvidia stock and strengthens the beliefs that say Nvidia still has a huge room for further development. This price target hike on Nvidia's price target was not really out of the blue, as it came as a result of Nvidia's continuous innovation, hence the massive bets on the tech giant never stopped. But before we get into today's video, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
All right, let's check in on a few of the top analyst calls from today. Nvidia shares higher on the back of two price target boosts. UBS raising its outlook from 120 to 150, citing demand momentum for the Blackwell chips, while Wolfe Research also raising its price target to 150, calling it one of the best ideas in semis. So UBS, for its part, talks truly about demand momentum for Blackwell rack scale systems, says it's robust. Sentiment, yes, they say it's recently faded on the stock in the last few weeks, creating what they say is more a wall of worry that should be ultimately healthy if our outlook materializes. And then separately, as we know, to Wolfe also raised their target to 150, talk about ASPs and improving mix driven by Blackwell.
Now, I'm sort of blown away. I don't know why I'm continually surprised by estimates for NVIDIA, but I still have the capacity to be surprised, apparently. So the consensus calendar 2025 earnings per share estimate for NVIDIA is $3.69, according to Bloomberg estimates. UBS says, no, it could be closer to $5 per share because of these channel checks that they're doing. Wolfe puts the number around $4, but like $3.69 versus $5, that's a pretty big gap here. And the naysayers with NVIDIA have talked about this slowing growth trajectory all around. There's no way they could keep up this pace of growth. UBS says, well, given what we're seeing when we talk to people who are buying this stuff, there is still high demand. Now, we'll see if that does end up being the case. But it's still, it's still
incredible.
Has its capacity to say, wow, $5 versus $3.69.
Well, isn't our friend Corey Johnson, if you tour him, didn't we ask him? And he said in his career, never seen anything like it.
No.
Never seen anything like NVIDIA.
We've thrown around the word unprecedented a lot after the past few years, but it still applies in some cases.
Analysts from Wolfe raised their price target on the chipmaker's stock from $125 to $150. And as of the time of this video, Nvidia stock is trading at around $128. So this new price target implies an upside of 17%. This move was prompted by the significantly huge demand on Nvidia's newest Blackwell GPUs, and this demand is so gigantic that Nvidia most likely will not be able to cope with it, as they are already short on supply capacity with their current offerings. And this shortage of supply capability is the only thing that is stopping Nvidia from earning further profits, which is a problem they are trying to tackle at the moment. And once they manage to overcome it, Nvidia's revenues will likely reach unprecedented heights. This is a result of companies currently racing to deploy artificial intelligence in either their systems or services, so they can get ahead in the ongoing AI race, which was kicked off when OpenAI released its impressive ChatGPT in late 2022. This new growth wave Nvidia is witnessing is represented in its stock nearing $130, and usually when analysts upgrade a stock, it indicates a positive prediction for the company's future performance, which is definitely a very bright sign for investors, eventually leading them to buy the stock and as a result drive it way higher. So, is Wolfe's statement really a surprise, especially as many analysts were already doubting Nvidia's future growth potential? Let's find out. Hello everyone, and welcome back to Investocracy.
The market cap is $3.15 trillion. And when we did our segment a little while ago on the race to $4 trillion, I think it was Gil Loria made the point, you can't have both Microsoft and Nvidia reach $4 trillion at the same time, because his line was basically, Microsoft can't afford for Nvidia to be that necessary. And if Nvidia is going to be that large, then Microsoft's margins will be destroyed and its profitability will be called into question.
I don't know about destroyed. You have to remember, a lot of the CapEx that's going on right now is not necessarily all incremental. Like, you can go look at sort of spending on traditional data centers, CPUs and traditional servers, networking. They're all in the toilet right now, right? I mean, so there's been a pivoting of spend from more traditional things to GPUs. Some of this GPU capacity as well is fungible. Like these cloud vendors can use it for their existing needs as well. Not all of it is generative AI. Some of it is things like recommendation engines from players like Meta, like other like more traditional, more legacy types of machine learning where there's already a clear return on that.
All right.
And you can sort of run through the math. Like if the returns take a little longer, I mean, it doesn't impact their margins all that much. It's a colleague of mine who covers Microsoft. He did some of this work. It's a few hundred basis points, I think, on margins given the incremental depreciation load. It's not crazy the amount of money that they're spending at this point. It's not like they go down the toilet if this doesn't come down. So no, I kind of disagree. I push back on that a little bit.
And we should continue that discussion because maybe they both can be $4 trillion companies and maybe Apple too.
These price target increases are not surprising at all, actually, as Nvidia's stock and the whole company's directive tends to be going nowhere but higher. And accordingly, analysts are forced to raise the price target to cope with the current market situation. Furthermore, in a recent session, Nvidia surpassed Wolfe's previous price target, pushing analysts to raise once again to avoid being left behind the curve. Moreover, it's actually possible for Nvidia's stock to even exceed the most optimistic predictions in the future, given the very high demand for Nvidia's chips and the unprecedented anticipation for Blackwell. A prime example is that AWS had already ordered 41,472 Blackwell GPUs even before they were released, and despite the fact that AWS makes its own AI chips. Although some analysts believe that a lot of Nvidia's demand has been pulled forward, which basically means that a lot of customers who would have bought Nvidia's products in the future have already made their purchases, and they might not be repurchasing anytime soon, they still think that the maximum impact this could have on Nvidia is slowing their growth rate only slightly. Additionally, according to the Wolfe analysts, predicting Nvidia's cash flows in the next few years is challenging due to various uncertainties, which makes it difficult to accurately value the stock. Yet, the current price target increase is a very strong indication of the market's continuous bullishness on Nvidia and its solid confidence in its ability to keep beating the sky-high estimates and doubts. If Nvidia maintains this incredible performance with the same rocket speed and widens its supply capacities, the stock will definitely soar even higher in the upcoming quarters. So what does this mean for Nvidia stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Next week, we have Netflix, Taiwan Semi, a ton of quarterly results. We'll be kicking them off. I mean, we'll start with the banks this Friday, and mega cap techs are on their way to you folks. You want to know what to watch for this as the NASDAQ 100 is hitting new highs today. Let's bring in our panel to discuss this. Michael Robinson, Chief Technology Strategist at Weiss Ratings, and Will Ryan, Founder, CEO at Granite Shares. Thank you both for being with us. Michael, you know, it was interesting because you said that you were bullish, but a little more selective these days, right?
Yes, it's a top-heavy market. I just want to take a moment to appreciate one fact. On August 2nd, we're 3 weeks away from a watershed moment in stock market and technology history, and that's when Apple hit $1 trillion valuation. And today, the top 5 tech firms are worth almost $15 trillion, which would make it the third largest economy in the world. So it's become a very top-heavy market. And in there, I mean, we know for a fact it's a tech-centric economy. AI is going to change everything. You just need to be a little bit more selective because small and mid caps are not doing as well as the mega cap and large firms in general. Just as a quick stat, Nvidia accounted for 30% of the S&P's gains in the first half of the year, and whereas the average stocks in that index gained 4.1%. So that's the largest discrepancy since 1990. But there's no reason to be afraid. Just put in a little bit smaller amounts in these. We're setting all these record highs, but be very, very selective. Go for the stocks that you really think have a great long-term appeal with superior earnings growth and a track record of beating the market.
Analysts believe that in 2025, Nvidia's GPUs might witness a 50% plus content growth, which means more integration of its GPUs in various fields. This means that the amount of Nvidia technology used in devices, data centers, gaming systems, AI applications, and more could significantly increase, which will ultimately be in Nvidia's favor. The market for artificial intelligence grew beyond $184 billion in 2024, a considerable jump of nearly $50 billion compared to 2023. This staggering growth is expected to continue with the market racing past $826 billion in 2030, and as long as the market is dependent on Nvidia's chips, the firm will benefit from this expected growth and stay safe from competition. And expectations are not only bright when it comes to the long term, but also in the short term. As Nvidia's outlook for the second quarter of fiscal 2025 is as follows. Revenue is expected to be $28 billion plus or minus 2%. Meanwhile, GAAP and non-GAAP gross margins are expected to be 74.8% and 75.5% respectively, plus or minus 50 basis points. For the full year, gross margins are expected to be in the mid-70% range. So with this in mind, Nvidia's stock is definitely a very good buy at the moment, as the company is about to achieve historical milestones. But what do you think about Nvidia's stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.